Sandeep, welcome so much to Scaling Europe Show. It is a pleasure to have you. How are you doing today?
I'm very well, thank you. How are you both?
Very good, very good. And you two know each other, right?
Well, I am privileged enough to be working with Paula's partner, Mike. I have not had the pleasure yet to meet Paula, so this is the first time.
Yes, I've heard so much. Very exciting to have a live first conversation.
Amazing. Very cool. Well, look, Sandeep, for those who don't know, why don't you give us a quick intro into who you are, where you work, and your kind of investment piece, I guess.
Sure. So I'm Sandeep Bakshi. I look after the venture arm for Europe and the US for Prosus Ventures. Prosus is the largest listed tech company in Europe. So we've got about $170 billion net asset value. We are well known for a number of different things. We have a lot of investments in the food delivery space. We've recently announced that we're in the process of acquiring Just Eat Takeaway. We have a sizable position in Tencent, a number of different things. I'm going to spare the brain damage of going through all the various things that Prosus as a group does, but I will focus on Prosus Ventures. So Prosus Ventures, we're the venture arm of the Prosus Group. We're not a fund. We are investors off of our own off of our own balance sheet. We sit on about $15 to $20 billion of cash, depending on which transactions are currently in the works and what's going to go through. We're global investors, so I spend my time in Europe and the US, but I have colleagues that look after Latin America, India, the Middle East, Southeast Asia. We're earlier stage investors. So early for us is basically we're investing starting at like $10 million type checks. And then we can scale all the way up through. Our public nature, because we're not a fund, allows us to invest in companies early and then hold on, into an IPO. So for example, a good example for, you guys and your audience is one of our early investments was into Tencent in China. In the early 2000s, we invested in an all secondary transaction. We invested $30 million for 50% of the company. And while that was a successful investment, the real guts was never selling. We sold our first share in the company in 2018 when we sold 2% for $10 billion. And that was basically through dilution. When we sold that, we had about a little north of 30%. And I think today we sit a touch south of 30%. So that's kind of our business. Our model is that we believe that, the businesses that we're backing will compound over time. And we want to be able to participate in that growth as they grow larger and larger.
That Tencent investment must be one of the best returns in venture history. I mean, it's ludicrous. How long are you holding for?
I think we have. So one, I have the luxury of not managing that position at all. But we're, that's a position that we're very, very happy with. And, we're maintaining our stake. But it's something that I don't have any visibility into.
Amazing. That's such a cool, it's an amazing investment to be able to talk about and to have on the Prosus type track record. A phenomenal share and stake. And like you said, like you have the flexibility to, without having LPs, you have the flexibility to hold for as long as it makes sense for your business, which I think is a really interesting and different approach and model to traditional VC funds.
No, for sure. That's honestly one of the unique things about us is that we try and find companies early, but try and, back them as long as it, makes sense for them as well. So, I mean, a different example could be Flipkart in India, which we backed. We owned a sizable stake. And when it made sense for them to sell, they sold to Walmart in India. And we participated in that as well. But it's so it allows us to be part of companies as they go public or when they sell. And it also allows us to take bets that, theoretically, I led our investment into a company called Oxford Ionics. It's a quantum-based company. And, quantum, when I think we were spending time in our investment committee looking at it, they were like, look, this is probably going to be something that we're going to have to sit and hold for a really long period of time. Lo and behold, it was announced a couple months ago that IonQ came and acquired that company. It was a pretty healthy return for us. And it made sense for, it's still going through regulatory approval, but it made sense for the company to be a part of IonQ. And again, we're able to take those really long-term bets, which makes my job pretty fun.
How does that change? How does that change your thesis, or how do your investment committees go? Because, I come from a more classic VC background where we also think about long-term compounding, but it's, there is somewhat of, a bias to exit eventually, whereas you could remove that pressure entirely.
Yeah, look, I think that what we're looking for, so what it truly means, and, looking at folks like, GC, Lightspeed, some of these, multi-platform, Andreessen, et cetera, what we're looking for is really, really large markets. That's kind of what it boils down to. And now I think probably the big difference is, and again, it's investing in deeper tech is not a core focus of ours, but we have the ability to do so if we think that it's going to make if we think that, like, generationally speaking, it could make a difference. So, for example, we announced today that we invested in a company called CuspAI, which just raised a fairly sizable round. We haven't announced, but we're doing a lot of work in robotics where we made an investment that will be announced shortly. So I think that taking some capital and making bets that, theoretically speaking, could prove out to be moonshots over time is a way that we allocate our capital. But also, we're also focused on businesses that we think, could be could have a path to exit in, relatively sooner. But what allows us the ability to do so is that if we see a lot of traction, because I don't think a lot of people are able to predict when there's going to be an inflection point in a business. But if we're able to take some of these longer term bets, who knows when, I don't think that sitting in 2017, people were able to be like, oh, at X point, OpenAI is going to release this model and it's going to take off, the way that it does. It allows us to basically take a little bit earlier perspective on something that could be a little bit longer, and then participate in the upside as it comes. And I forget who I'm misquoting here, but it's people overestimate the long term and underestimate the short term. I feel like that's a quote that's out there by somebody where
the other way around, that you overestimate like what you can do in a day or in some shorter time frame, and then you underestimate how much can change in the long run.
Exactly. And so it basically allows us to have, a seat at the table and double down when we feel like the time is right.
Amazing. Can we talk about CuspAI? Because that was news came out a few hours ago. You said it's like a sizable round. It's pretty massive, $100 million, I think Series A or seed. They're like a Cambridge-based materials company. I think they said that they're building like an AI search engine for the material space. This is probably one of the UK's biggest rounds of that size at that stage. What about CuspAI attracted you to it?
I think on this one specifically, it's the team. The team and the market size more than anything. We were, we didn't lead this round. We're small participants in it. But for us, again, going back to the point that I made just now, it is such a massive market. It's such a strong team, and for them to have the capital to really kind of crack this, I think is very, very attractive for us. And we've been, I think, we've been selectively making bets on, infrastructure for either some specific verticals. So, Cusp is one, Corti is another, which we did in the healthcare space, where we think that there are really, really sizable markets, and it's perhaps a little differentiated or a little unique to build infrastructure for these markets, where the larger LLMs or the larger model providers are not yet particularly focused on, or may have some either technical difference or regulatory nuance that would make it a little trickier to get into.
Yeah, that's a super interesting point. Yeah, because I spoke to the founder of Corti a few weeks ago. You're right. He's building. It's almost like LLMs, but in the medical space, right? And he's, they've seen an amazing amount of success. So it's almost like, and similar with CuspAI in the material space, it's like deep LLM tech sort of, but in quite niche industries, but are still massive, massive markets. Is that like a thesis of yours that you're going to double down on? Are you looking at more companies that are building this type of technology in markets that I guess are underserved by the big tech giants?
Look, I think that for us, the way that we think about it is that we're looking at, so to your point, right, niches perhaps has a misconception of being small, but niches in themselves can be fairly sizable.
Yeah.
I think first and foremost for us, what we look for is where can we find, perhaps at the same time or a touch earlier than others, teams that we think are exceptional. That's probably the thing that we look for first and foremost, in TAMs that are large enough to make our numbers work, to make our math work. And in markets that I think that, one of the things specifically when it comes to kind of hoardy and vertical applications, in markets that are not the easiest to crack. So, so Andreas came on and he gave you kind of the story of Cordy, but they built some very, very specific infrastructure that is very much catered toward their end customer, right? Their, dev tool for the healthcare space that allows, the hundreds of thousands of people that are building applications in AI to actually link into them, that they can do so cheaper, faster, more accurate, less hallucinations, more applicability than the average LLM, right? You read across that for Tactile, right? Which, Paula might be familiar with. Tactile is going to they're building. So apart from a lot of the things that they're doing in financial services, they're announcing an agent for underwriting, right? Which is a very, very specific, nuanced application, which again is a niche. It's a massive niche. And everybody that, I've had the pleasure of putting the team at Tactile, Mike, Max, and the broader team in front of, every customer is like, wow, I can't believe, because a lot of these enterprises don't have the ability or don't have the technical wherewithal or the time really to go out and be like, hey, I'm sure I could cobble together, Clay and Anthropic and X, Y, and Z tools and build this. But they're like, oh, there's somebody that's actually done all this hard work for us. And so Cordy is one, Tactile is the other. There are more and more that we're finding in these niches where the niches are just absolutely massive.
Yeah.
Yeah. And maybe like niche is almost more, it's something that's not legible to the broader public. So if you say underwriting agent, the broader public would be like, huh? Okay. Like what? But if you think about it, underwriting credit or insurance or any sort of risk decision is actually happening in most organizations that are somehow either giving credit to their customers or who are even trying to prevent fraud. As an e-commerce company, you're always like underwriting a transaction, and I think that's very interesting. Niches often are not immediately legible, but when you then double click on them, you realize, oh, okay, it's actually everywhere.
It's basically the thing that I love when I'm spending time in these AI application companies is whenever I have the opportunity to speak with customers or prospective either prospective customers or existing customers, and this has happened with Tactile, with Cordy, with the other ones that we've invested in, where the buyer shares an anecdote which is along the lines of, my team had been talking about AI or my team had been talking about X, Y, and Z, but I didn't think that it was applicable to my business. And then I saw this demo, or then I saw this use case, and then I was like, whoa. And then for existing customers specifically, after I implemented the product or the service, it made my life so much easier. And like that for me is just such a hook, because there's a lot of growing pains that companies will face, but that's clear evidence of product market fit, which again, going back to, where we typically look to invest, if the market is massive enough, we'll invest in kind of product market fit where there's just, I'm probably going to do myself a disservice, but I'm a door opener. That's where I like to spend time, right? Is to basically trying to find the entrepreneurs that are spending so much time building, spending so much time trying to identify their end customer and then try and elevate them to, platforms or podiums where they have the opportunity to sell to the right type of enterprise customer, because that just makes it so much easier and allows them to really accelerate quickly.
Yeah. Yeah. Elephant question in the room. How do you implement AI in your own work, in your own organization? This is my current favorite question to the VCs, because, we're investing so much in AI. What's your favorite way to use it yourself?
So, we as an organization have a luxury where, given our size and scale, we hired a team that's been working on this since like 2017 or 2018. So we actually have an internal assistant. It's called Tokan that we use. We leverage quite quite often. It's an assistant that links into all of our internal databases. We also use, a lot of the call recording stuff that's out there. Be it, Granola or others. We leverage the note-taking software that's out there. But I think the thing it's actually interesting. We're an investor in like a private equity-esque business. It's like a roll-up type business. Mm-hmm. And I was chatting with the founder there. And the interesting thing about venture specifically, and I'd be curious to hear your perspectives, but venture at the end of the day for me is still a deeply human business, because at the end of the day, you're still trying to convince, especially for us, where I'm not quite in the needle in a haystack business. The universe of companies that I'm looking for are identifiable. Like it's not infinite, or it's not so much so that's insurmountable for myself and a team to actually go and talk to throughout the course of the day. For me, the end point becomes, hey, Sandeep, in the infinite universe of capital that exists out there, why you? Why should I give a shit? Like, why are you the right person? And that turns into a human conversation. And it turns into like, hey, speak with some of the other founders, speak with some of the other people that are part of our ecosystem. That's where it makes a big difference. But to juxtapose to this other company, one of the things that we're trying to be active on is for ensuring that our companies that we own have enough wherewithal, one, about how our portfolio companies are deploying AI, or how our or telling our portfolio companies how our internal companies are deploying AI, and leveraging kind of the knowledge and insight between that. But the anecdote that I gave when I was starting them on this roll-up business that we acquired, you juxtapose that with either private equity or some of the different asset classes where it's not a need, it's where there is a larger subset of companies. To give you some rough numbers, this company that I'm on the board of, we haven't announced it, so I can't share what the name is. But last year, or not even last year, I think in the past 6 months, they assessed 450,000 opportunities to acquire. They then sent, I think, 15,000 emails. And of that, and this is all leveraging some of the tools that are out there with some fine tuning and some business logic. And they ended up making 4 acquisitions. That is, that's really putting AI to the test. And that's something that's pretty impressive when we see. And we've tried to basically leverage the learnings from that company to actually see what we can do better ourselves.
That's insane. That's absolutely insane. So AI was running that process for them. Is that right? 400,000?
Yeah, 450,000. So it's basically completely running their sourcing.
That's insane. And then you say, that's like 1 in 100,000, I guess, it ended up being acquired.
A little less, yeah.
Wow. That's an amazing example.
Yeah, it's like, there's almost like maybe not the investing piece that needs to be automated, but a lot of other things around it and things down the line that drive you towards returns.
And also, it is not, we've been talking a lot in this episode alone, but in other episodes about VC value add. And it's super interesting that you're talking about the application of AI in your own internal company as a value that you can give to your portfolio as like a leading case of how to like use and leverage AI in their own operations, which I think is super interesting.
Yeah, that's one of the ways that we try and think about it.
Really cool. I also wanted to talk about, what your take is on the state of European tech as a whole, European venture as a whole. We're seeing a sort of resurgence in European optimism. We had Andreas Klinger from EU Incon. You've been investing in this space for a while. Like, I guess, what do you think European tech, European innovation needs to sort of take it to the next level?
It's a big question. Look, I think that from my perspective, having spent some time here, there is no shortage of ambition. There is no shortage of talent. There's no shortage of kind of generational founders that are actually really willing to give back to like other entrepreneurs. It's amazing. You talk about like, Maddie from 11 Labs or Anton from Level. Maddie, I have the pleasure of knowing. I mean, these people are actively thinking about how can we ensure that, this narrative of, lack of European ambition, lack of European opportunity doesn't exist. There's definitely no shortage of capital. I know how competitive it is. It's like, I wish it was not as competitive. It's an insanely competitive market. I think that the two areas where I try my best, or we as an organization are trying our best to be a part of the dialogue is, how can we reduce the regulatory friction if that exists? And that's something that needs to be at the highest level, because the reality is that for a lot of folks, while there's still a number of European companies, what we wanted, and the US exists as a massive, massive market, we'd love to see, companies have the opportunity to expand across other countries in Europe before maybe making the shift, as opposed to getting product market fit in, one market and then moving to the States. But at the moment, it's a tough trade-off for founders to make, because they recognize it's like, hey, look, I've got a product here that works, and we've got language barriers, tax barriers, it's difficult to hire, fire, et cetera. There's a number of regulatory friction that exists. And that's an area where we're hoping to be a part of the dialogue and hoping to have we're hoping to have more of a say in that. We're pretty active, and we've made some publications on that. I think the other thing that would be great to see more is enterprise adoption, or willingness for enterprise adoption for technology. That's one of the things that, in the US, there's so many enterprises I want to know what's going on. Versus, more often than not, it's sometimes it's like there's some small innovation department in some silo in some part that we'll try something. A lot of founders are like, I can't get lost in 5 years of procurement where there's no case study. There needs to be a little more from enterprise, at least in Europe, top down, where it's like, hey, actually leaders are very curious about what's going on. And I see that for American institutions, which is probably why for a lot of founders that have just such clear product market fit, it makes a little more sense to go to the States. It just a little more ability to creep into enterprises would be, especially in Europe, would make it a lot more attractive.
Yeah, I've actually heard that from a couple of founders who are selling both European and US companies. It's like the risk appetite within enterprises, the speed that they move, the bureaucracy to kind of get new and innovative tools kind of brought up by the business. But Sandeep, I'm conscious we are out of time. We're actually over by 8 minutes already. But this has been an amazing chat. We'd definitely love to have you back on. Thank you so much for joining us.
Thank you so much for having me. And thank you.
Great to meet you, Sandeep.
Great to meet you too.
Catch up in person soon.
I very much look forward to it. And congratulations on the platform that you're building. It's amazing.
No, thank you very much. All right, let's speak soon.
Tell Seb.